Here is the overview of today's gold market news. Gold price trends and outlooks. Economic data and Federal Reserve policy impact on gold. Geopolitical risks and safe haven demand for gold. Volatility in the gold market. Let's look at the latest gold price trends and outlooks. On Monday, gold prices fell sharply from the previous week's high of $2,720, reaching a low of $2,610. Gold prices are mostly down for the week. Despite a significant drop early in the week, gold found solid support around $2,600 per ounce and experienced a rally after Monday's sharp sell-off. Gold prices are closely watched for key resistance near $2,663. A sustained move above this level could signal a bullish trend, while a drop below $2,631 might indicate a bearish sentiment. Gold is expected to remain range-bound in the short term, influenced by economic data, Federal Reserve policy, and geopolitical events. While many analysts have stepped back to wait for the volatility to subside, long-term sentiment for gold remains positive. There is growing expectation among analysts that gold could reach $3,000 an ounce next year. Let's look at the recent economic data and Federal Reserve policy impact on gold. The Friday U.S. non-farm payrolls report is expected to influence the Federal Reserve stance on interest rates. A weaker jobs report could lead towards a rate cut, which would likely push gold prices higher. A stronger dollar, particularly in light of upcoming jobs data and inflation reports, could limit gold's recovery prospects. The dollar ended November higher due to expectations of prolonged high interest rates. If the non-farm payrolls report strengthens the case for continued Federal Reserve tightening, this could further boost the dollar, capping potential gains for gold. The recent core personal consumption expenditures inflation data showed inflation at 2.8% over the past year, well above the 2% target. The persistent inflationary pressures complicating the likelihood of a rate cut. While this suggests that inflation is not yet strong enough to eliminate expectations for rate cuts, it creates uncertainty around gold's prospects. Market expectations are pricing in a 66% chance of a 25 basis point reduction in December. The inflation data creates uncertainty regarding the Federal Reserve's next moves and consequently impacts gold price outlook. The resilience of the U.S. labor market adds another layer of uncertainty. Strong non-farm payrolls numbers could lead markets to price in a shorter rate easing cycle, potentially reducing gold's appeal. The Monday gold price sharp drop from the previous week was primarily driven by rising U.S. Treasury yields and a stronger U.S. dollar, which have been persistent headwinds for gold. Gold prices began to recover on Tuesday, boosted by the release of the Federal Open Market Committee meeting minutes. The minutes revealed that the Federal Reserve remains committed to gradually cutting interest rates toward a neutral level, despite ongoing inflation concerns. This provided support for gold, as it is an indication that rate cuts would continue. While the gradual rate cut may have limited immediate gains for gold, the market is focused on the Federal Reserve's commitment to rate cuts. This interpretation helped push gold back toward $2,650 per ounce. Additionally, expectations that the incoming U.S. administration might pressure the Federal Reserve to accelerate its monetary policy path could add further volatility to gold prices in the near future. Moving on, here are the latest updates on geopolitical risks and safe haven demand for gold. Ongoing geopolitical tensions, particularly the Russia-Ukraine conflict, continue to support demand for gold as a safe haven asset. Although market optimism earlier in the week reduced safe haven demand, any resurgence in geopolitical risks could reignite this demand, supporting gold prices. Geopolitical events, including policies from President-elect Donald Trump and the risk of a new trade war, are contributing to the choppy gold price action. A potential trade war could increase inflation and dampen economic growth, which would support demand for gold as a safe haven asset. Next, let's look at the volatility in the gold market. Gold traders are preparing for increased volatility in the coming weeks as a result of economic releases, including the non-farm payroll report and geopolitical developments. The direction of gold prices in the near term will likely depend on how these factors unfold. The gold market has experienced significant volatility recently and is expected to remain turbulent, with December anticipated to be particularly bumpy. Gold has managed to hold support at $2,600 per ounce, but uncertainty remains as investors await further economic and geopolitical developments. Despite the difficult environment, analysts believe that the volatility in the gold market presents buying opportunities for investors who missed out on the rally earlier in the year. The U.S. economy is described as being in a Goldilocks scenario, neither too hot nor too cold, creating a lukewarm environment that provides little clear direction for gold. This scenario complicates gold's role as a safe haven asset and inflation hedge. The changing political landscape, especially with the new U.S. administration, may influence monetary policy decisions. If the administration exerts pressure on the Federal Reserve, it could create increased sensitivity to political headlines, leading to higher volatility in gold and other assets as we approach the inauguration and beyond.